Hey traders, TG Watkins here of simplertrading.com and welcome to StockCharts.com TV. And we're going to be going through some things about the Moxie indicator and how it works and how I use it in the markets. So I've got a list of general names that we're going to be going through, showing you various things about the indicator and about how the markets work so that you can see the pros of the Moxie indicator and the way that it can help you make trades or read the market a little bit better. So let's go through this. If you guys have any questions about who I am or where to find more information about me, you can obviously check out stockcharts.com, which is where you could be seeing this down in the caption, also on the YouTube. And then over here at profitpilot.com, we've got all sorts of answers for you where you can find more about the indicator, the mastery, the alert service, all that kind of stuff. So take a few minutes, come over here, check it out, and see what we can do for you. All right, well, one of the first ones that I would just happen to show you today is going to be XPDI. Now, this is a SPAC, and it is in the Bitcoin mining space. So, you can take that for what it is, but really there are a lot of patterns and setups that I wanted to show you. So this really doesn't matter what vehicle we trade or what index or industry or sector or anything else like that. A lot of these patterns are the same, and that's how I'm able to trade this stuff using the Moxie indicator. So to partly show that, I'm going to be showing you a variety of tickers in a variety of sectors and how these things all work. The thing I wanted to call attention to on this one with XPDI is what I call the inverse trampoline move. And that is when price is over the 50, but the Moxie indicator is below zero. Now, in this example, this is an hourly chart. So that is the hourly 50 and the hourly price. And so what you can see is price is trying to push up past the hourly 50, Moxie indicator below zero. That is an inverse trampoline move. Price should not be over the 50 if the indicator is below zero. And you can see that it subsequently went down. Now, a couple other things just note generally about how to read price and how to look at this is that you should note that the hourly 50 is in a downtrend. So that's not very good, especially if you're wanting price to go up. It's a conflicting angles. You got to think about it. Like, if price is going to go up, but the moving average is moving down, conflict of angles, right? They're not going the same direction. And so you really, when we try and boil this down to simplicity, well, price shouldn't be going up if the moving average is going down. So keep that in mind when you're looking at general movements of the market and price. The other thing to note, and I look at this quite often, is how far away is price from supporting moving averages? And I really like to use the daily and the hourly, but it pretty much applies on any time frame. And you could see that when this move started to wear out, price was very far away from the hourly or from the daily 50. You can see even here it was still very far away from the daily 50, and then that's where it wanted to do. So when you see a lot of air or gap between price and moving average support, just be careful because at some point that might wear out. The other thing that we can kind of talk about with this one is that we could see that price was starting to weaken. And this is where the Moxie indicator really does shine, along with that inverse trampoline move, is to show you that internally the momentum and energy of a stock like this is starting to wear out. So one thing to note is you had price like this, you finally had this move up like that, but notice that the Moxie indicator basically did not respond. So think about it. What is the indicator trying to communicate to you? Well, it's trying to communicate to you how much effort, energy, and momentum is in a stock. So if you see that price is going up like this, but the indicator is still flat, well, that's not supported. Why is price going up, but the indicator is basically unresponsive? That's something to really note and keep in mind when you're trying to get out there and trade and figure out what is going on and how the Moxie indicator is communicating to you. Now, another one is Wells Fargo. And this one had a bunch of examples that I wanted to show. So on this, we're just going to stick with the idea of an inverse trampoline move. Now, Wells Fargo in general has been a pretty messy stock. It really hasn't gone anywhere. So for me as a swing trader, it's not really the greatest vehicle to be trading. Perhaps as a shorter term day trader, something like that, or a short term swing trader, it would work fine. And also remember, since I've just kind of touched on day trading, that everything I teach here can also be applied to the 15, the 5, and the 2 minute. So I get a lot of questions about, well, what about day trading? Which right about now is about a good time to be day trading or something like this. That's fine. Take every single thing that I'm teaching you right now using the Mox indicator on the daily and hourly. And if you want to day trade, just apply it to the 5 and the 2 minutes. And then you can see how this all this stuff works. The way that I have the interaction with the moving averages, the positive negative divergences about the Moxie indicator, and then the Moxie indicator crossing above and below zero. Just apply it to the lower, faster time frames. So a couple things to note about this, and since we're on the inverse trampoline topic, notice here that price was up over the daily 50, but the Moxie indicator stayed below zero. So price should not be over the 50 if the Moxie indicator is below zero. And what this was telling us is that even though price got over the 50, momentum and energy is still negative, and that's a rough situation. You got to be real careful about something like that because, well, invariably it's going to come back down and either test the 50 or go right through it if it's going to be a failure. So that was something to kind of see there. The other thing here, we're kind of seeing that the Moxie indicator crossed halfway through. So that's the other thing is if the indicator is going to be delayed, meaning that it is firing basically halfway through the move or late, well, the way to fix that is you need to see price come back down to the 50. In case in point, we're seeing this also price over the 50, back to the 50. And if this is going to work out to the long side, we're going to have to give it more time to really figure out if it's going to hold these moving averages. And we can see that also on the lower time frame. Then again, let's go back over to the hourly chart. I'll show you how these negative divergences work out and then how also some of the inverse trampoline moves work out. So notice here, price kept going higher, 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 but the Moxie indicator kept going lower, lower, lower. What's it communicating to you? Well, it's trying to tell you that even though price is going higher and higher, it's doing it on less and less energy. And in fact, once the energy and momentum actually gets to zero, that's where we get our Moxie price trigger, which is just showing you on the price chart, just for a visual reference, that the energy and momentum is now negative. Therefore, any more moves up should be careful and be treated with caution because that becomes an inverse trampoline move. Price should not be over the 50 if the Moxie indicator is below zero. At some point, that thing wears out and comes back down. And then again, when price is really going to roll off and go down, check this out. That is a very, very large inverse trampoline move. Price was over the hourly 50 for quite some time. The Moxie indicator was so far below zero, it was just never going to happen. And so that is what pulled price down. Now, if we come through here a little bit, let me show you some perks, show you some good setups for the Moxie indicator. How about this? Notice this level right through here. Notice that the Moxie indicator kept trending up. So price doesn't want to go. Indicator keeps trending upward. Yeah, there might be a move. Might want to pay attention to that. Where is the move? Well, right here. You can see I always like to see price test moving averages to confirm that they are indeed support and that price is going to respect them and move up. And that's exactly what you can see here. Price shot up and pulled back into support. Moxie indicator was already above zero. This is great. And then it continued to move up, and every dip was buyable in through here until this thing finally had basically a blow off top and just got way too extended. So there was the trade. And then just to make sure, maybe you thought you could buy the dip and it was going to go up again. Hey, look at this. Yet another inverse trampoline move. Price should not be over the 50 if the Moxie indicator is below zero. Boom, down that thing goes. So then we can kind of move sideways a little bit. I'll show you a couple more in through here. We can look at another couple sections, and here is the Moxie price trigger going negative. So there's the indicators telling us that things are now bearish and negative. And you can see here, inverse trampoline move, and yet again, another inverse trampoline move. So you just got to keep waiting to see if there is a long setup and don't rush it. All right, then another one, if you look at BAC, so Bank of America, and I just wanted to show this one on the higher time frames because even on the daily chart, look how good and effective this thing is. So even on the daily chart without reading the hourly, here is your Moxie price trigger right there. That's basically just telling you that the indicator has gone positive, energy and momentum has gone positive. And then I want to see it pull back and test support. Look right here. That is a trampoline move. Price below the 50 coming down, testing support. The Moxie indicator staying above zero. It's a high buoyancy type trade, right? Energy and momentum is still positive. And then you can see price shot up and made a pretty good move. Now, what about on the flip side of that? What about when things wear out and make sure that you don't hit this big move to the downside? Well, there's your price trigger to the downside telling you that energy and momentum have now gone negative. And then that little bounce up after that, well, that's an inverse trampoline move. Price should not be over the 50 if the Moxie indicator is below zero. And that is then what gave you the clue about price careening down to the downside. Now, Here's another one. We can set things up to the long side, talking about trampoline moves. Here's your Moxie price trigger telling us that the energy and momentum has now gone positive. And so we're looking for some moves. Well, there's a trampoline move. Great. Price dipped below the 50, but the Moxie indicator above zero. That's a high pressure, high buoyancy type trade. And we got to move out of that. Now just be aware of other moving averages. Simply put, the Moxie indicator is not everything. You do have to work with moving averages because that's basically how stocks work, and that's how price respects where things are going to go. As it ran into that moving average overhead, you can see it also ran into that moving average right there. Then, as price came back down, check this out. That was a regular trampoline move. That's a trampoline move. So price level, Moxie indicator stayed above zero. And maybe this was earnings, and so maybe you weren't going to trade earnings, and you see that it popped up. Well, hey, let's dive in and see what this thing actually looked like to see if we get a good move from there. And I think where that one was right in through here. All right, so what I wanted to show about this one is when you finally got the move, and again, maybe this was earnings or something, move jumped up. Well, how do you know if it's going to want to come back down, test support? Check out the hourly chart. Obviously, the Moxie indicator was above zero, so your energy and momentum is positive. And look at price dipping below the hourly 50. There is a trampoline move. And when price gets back on top of the hourly 50, then you can keep going, and then you've got your move. And then over here on the daily chart, got a little overbought and then pulled back into the daily 50. Moxie indicator was above zero, so good trade right there. And then price continued on its way up. And if we look here, keep zooming out on the daily chart, here is where the Moxie indicator went green and positive. Here was the trampoline move. Here was the test of the daily 50. And here is where the Moxie indicator finally fired to the downside, saying, hey, might be time to get out of this thing. And then we get one more right there. That is an inverse trampoline move telling you that this move right here was likely to pull back. An inverse trampoline move oftentimes is a short signal, but a lot of times it can mean, hey, it's not ready to go long yet. You just have to wait. And so this is when price is up like that. If the Moxie indicator is still below zero, it's fine. Just have to wait for price to pull back into support and then show again that it wants to move up. And there you can see you got the Moxie price trigger firing again. You can see it pulled back into support right there. And here is your double bottom with positive divergence. Pretty good situation of what's going on out there to trade this on the daily chart. All right, now another one, waste management. This was a pretty cool one on the daily chart. Let's kind of step back, show you the bigger picture of this one. How's this for an exit on the Moxie price trigger, right? So that's telling us that things are going to be going down, not looking so hot. And then if we zoom in a little bit, make this a little bit clearer, man, guess we won't do that. We get, here's the Moxie price trigger. And you know what? Then we wait for price to come back down, test support, and right there is where price came down, test support. Moxie indicator is obviously very far over zero, so very positive, very energetic, and we continue to get a nice, good move up and through here. And then price, energy and momentum wears out right there where the Moxie price trigger fires to the downside right there. And then you can see that, in fact, price does come back down, needs to find some support. And then you know what? The next move to the upside, right there, Moxie price trigger firing to the long side. And that is all looking pretty good. And then you see another test of the daily 50 right in through there. Now, as far as this area, starting to get a little sketch. We've seen a lot of negative divergence come into price. And you can see that the Moxie indicator is now pretty much rolling over and starting to go negative. So I would be very careful about this and when you see those kind of patterns. Now, Ford is another one that had some really, really good trades. And if we zoom in on just back here, show you how these things kind of worked out. Here is the Moxie price trigger firing to the downside. You can see right in through here. And you know what? As I said, I like to use a combination of the Moxie indicator plus moving averages. And in through here, we could see that this became an inverse trampoline move. You could just barely see that maybe about a day or two. Price tried to pop up over the daily 50, but the Moxie indicator was below zero, and that was telling you that shouldn't be up there. That's an inverse trampoline move. We could also see that the 8 was below the 21, and also that the 50 was below the 200. So in both these situations, we had the fast moving average below the slow moving average, and that is actually a definition of a downtrend. So this one really, really worked out to the downside, really careened on over. And then, you know what? Decided to find a bottom, started to hammer that out, started to kind of build a base. Notice that the Moxie indicator was starting to scream to the upside. There's your price trigger. Cool. You can catch a move up there. But like I showed you on the last ticker, be careful about these moving averages that are overhead because price will run right smack into them. And then your next opportunity is whenever price comes back down to test the support of an uptrending moving average. And you can see that right here, testing the daily 50 with the Moxie indicator above zero. And that now worked out. Price was finally able to get past the daily 200. And then look at this, yet another opportunity right there with a daily trampoline move. Fantastic on how that process worked out. And then we kind of move over here and you can see the Moxie indicator was able to tell us, hey, there's a pullback coming. Had it, fine, but it got us back in for when that thing worked out. And then you know what? Oh, there's going to be another pullback, get you out, and then gets you back in when the thing moves up. Now, what I would like to do is let's get a little bit more detailed right in through here on that pullback right there. So I do want to show this thing. So what we can see is here's the Moxie price trigger on the daily chart telling us that, hey, momentum is going negative and it could be problematic on this. But then you're also looking at the daily 50 and thinking, well, maybe price is just going to bounce off the daily 50, depending on what kind of indicator and how you guys trade. Well, here's what I want to show you about the Moxie indicator, and that can tell you pretty ahead of time that price is not going to hold the daily 50 and or it's going to head to there. So what we could see is initially there was a big gap between price and the daily 50. But look where that was on the hourly chart. All the way back there is where we got information or got a clue, got a signal that the Moxie indicator is now going negative, and therefore price is going to pull back. And basically any bounces in this are going to be problematic or can be shortable because a bounce like this, price over the hourly 50, but notice that the Moxie indicator is very much below zero. So right there, you can see that that was an inverse trampoline move. Price should not be over the 50 if the Moxie indicator is below zero, and that was telling you that was a false long. Now, if you want to go short, you can maybe try and nail that. Otherwise, the more robust short that actually has shorting signals is right here as price ran right into the underside of a downtrending hourly 50 with the Moxie indicator below zero. And then basically every bounce after that inverse trampoline move until we finally get a little bit of a capitulation and we start getting some funkiness in through here. So this was all pretty good. This was some really good, interesting trades right in through there. Anytime price gets too oversold, you got to take your profits, just like when price gets too overbought, they're going to snap back the other direction. Now, there might have been a little bit of confusion in through here as far as the hourly goes, but the Moxie indicator again tells you when price is ready to go down. You can see there's your Moxie price trigger to the downside, and then we start the process all over to the upside. And with that, you can see that there was, let me kind of zoom in a little bit more on that right in through here, because now you can see it was starting to set to the long side. Here's the Moxie price trigger going green. Here's the Moxie indicator over zero, which is what that's communicating. Trampoline move, boom. There's your move to the upside, yet another trampoline move, and this thing continues up. So it gave you several warnings and indications that this thing was ready to go back up. So you can kind of trade both sides if you're interested, and the Moxie indicator will keep you on the right side of all of them. All right, then we look at Tilray. There was some activity that I wanted to show you. If we look at the daily chart, talk it again about these inverse trampoline moves because I think they're important. I think that part of what's difficult about trading is when you see price move up and you think you're going to catch a good, nice long trade, and then it just fizzles on you. It just goes down. And I think what you'll see is the Moxie indicator can kind of help you with that because here price is over the daily 50, but notice that the Moxie indicator is just very much below zero. There's basically no hope that the indicator is going to get over zero anytime soon. And so you should be aware of that and say, based on this combination, based on what I know about the Moxie indicator in this inverse trampoline move, it is unlikely that price is going to keep moving up with this daily 50 because the Moxie indicator is still below zero. So we take that and then we can move over here. And what I want to show is this thing continued into a downtrend all in through here. So we finally get another little bump right there. We do get a Moxie price trigger. So looks like it could be promising, but this is why I like to use the confirmation of price testing the moving averages, because right in through here, you can see that we did get price over the daily 50. We did get the Moxie price trigger, but did price hold the daily 50? No, it did not. And so that's where You just got to say, oh, I was looking for price to hold it. I wanted it to go up and it didn't. So you step aside. All right, then COHU wanted to show this one. This one had some pretty good situations. Going back in through here, you can see on the daily chart, and talking about these inverse trampoline moves, here's your Moxie price trigger telling you that energy and momentum have now gone negative. And that was a change from price moving up and up and up. The Moxie indicator kept going down and down and down. And look at that timing. That is amazing timing for what the indicator can do for you as far as when to get in and out of the market. Then you get some pretty crazy moves, up there. Maybe somebody's going to get suckered in looking at this thing and think, wow, that's amazing. It's going right up back to all-time highs. This should be great. But the Moxie indicator is telling you, no, this is not a good situation. That the indicator is still negative, below zero. So is momentum and energy, and price should not be up there. And sure enough, price understands what's going on, and it comes back down, breaks back below the daily 50, and just continues moving down for quite some time. Then you get it in through here. These continue to be inverse trampoline moves, possibly good areas to short if that is your style. Because just like a regular trampoline move, you should buy, so buy the dip. An inverse trampoline move, you should short the rip, short the bounce. And that's what we kind of see in through here. Now, in through here on the daily, we get our price over the 50, get rejected by the 200, and now we have a regular trampoline move on the daily. So I'd like to give this a little bit more time to see if it confirms if that's going to work out. And then just leading into what that move was, that first move on the daily chart, check this out. There's your Moxie price trigger. Moxie indicator is positive. Then you see price basically holding the hourly 50, and boom, you get a move. Nice situation. You even get a little bit of a trampoline move as price bounces off the hourly 50. And then you can see here is price going up, but the Moxie indicator going down. There's your negative divergence telling you, oh, this is going up on less energy. Better be careful because it might roll over and die on you. All right, let's get into one more. Target. This one had some pretty good indications around here too. If we go back just a little ways, I'll show you them. Here you go, Moxie price trigger telling you that energy and momentum has gone negative, and maybe you should consider either getting out or moving up your stops. But leading up to that, you could see that we had price moving up, the Moxie indicator moving down, and there's your trigger right when the indicator actually goes negative. And then you can see price comes down, falls off the daily 50, continues to get rejected by the daily 50, and then continues to move back down. So what about the long side though? Well, here's your Moxie price trigger. Now what's next? I wait for price to test the moving averages. And sure enough, right there, you can see price flagged very, very nicely into an uptrending daily 50 with the Moxie indicator very much above zero. And boom, you get a nice big move out of that one. So let's see. I think there was another in through here. This one, I believe, was earnings. So anything happens with earnings, but leading up to it, you could see that there was going to be some weakness. And here is how you can demonstrate it. Here's price trying to move up and up and up and up. But the Moxie indicator kept moving down and down and down. And finally, the indicator went negative right there just before price actually rolled over. It went down and broke the daily 50. Now, as I said, I think earnings were right there. So I think that's why it turned around and came back up. But that was a pretty good situation to be looking at. And then here's how the Moxie indicator gets you back in, tests the moving average for support, and then gets you back out. A pretty good situation right there as far as capturing most of that trend. And then to make sure you don't get back in that trend, like what I was talking about on the previous ticker about, oh, hey, look, price is up here at almost new all-time highs, or, it's about to break out. This looks amazing. Well, you better think twice, because look, the Moxie indicator is trying to tell you that this is an inverse trampoline move. You have price up over the daily 50 and the Moxie indicator is still very much below zero. That's not going to work out. And this is how the Moxie indicator can help you stay out of trades like that and wait for them to actually come back down, test support, and wait till the Moxie indicator actually goes green and goes over zero. So I hope you guys found that educational and important and also interesting. So if you guys find this really good and you think it'll help your trading and you can apply these to your list of stocks that you like to trade and your methodology, great. If you want to apply it to the higher time frames, you can. And if you're a day trader or a quicker kind of trader and you like the principles here, you can apply this to the 15, the 5, and the 2-minute time frames so that you can get a little bit more nuanced view and a little bit more nimble. I know some of you guys like to do that. Great. Take all the rules that I've applied, that I've talked about, and stick them onto the lower time frame charts, and you should be able to trade more or less the same way on how I teach. The principles are the same, the time frames are different. So thanks again for your time. We'll see you guys later.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.